Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonik to the stage. How you doing, Dima?
Good morning, Will. How are you?
Great. Let me share your screen and get you going.
Okay. Good morning, everyone. Let me navigate to the screen. And today we'll go over the option order flow sentiment report. There's a consolidated report. I'm going to navigate to it, and then we'll talk about it. So up top under the menus, go under options, and then go order flow sentiment. We're going to click overview, click on that, and this will take us to the main order flow sentiment report. And in this report, you're going to see different stock symbols up top. These are the broad-based ETFs, SPY, IWM, QQQ. And then if we scroll on the bottom, we're going to see some individual securities, and then different tabs that you could click on. Let's stay on the main page for now. And what this report does is it keeps track of option order flow throughout the day. So every time when there are trades in the options, they get reported. And then when we take a look at those trades, we could start to make interpretations how that order flow was executed relative to the markets, and comparing the markets before and after and so forth, to see if in general is the order flow coming in expressing more bullish or bearish type of sentiment. Okay. And with options, for example, if the order flow looks like they're buying calls, selling puts, that is more of a bullish type of expression. Selling calls, buying puts is more of a bearish order flow. Okay, so that's how it looks. When we look at that order flow, we do have to make interpretations of it, because we only get, the raw data shows the trades, shows the markets. We could take a record of how the markets look before and after, and so forth, and then we make that interpretation. So once we're making those interpretations, we aggregate and keep track how it progresses throughout the day. If it's starting out bullish, does it continue to build on top of that, get more bullish, or did we get bearish? Or if we get a balanced of bullish versus bearish, it'll stay more you're neutral. So to keep track of it, we give it a metric, and we use over here what we call the volume delta. So with options have different deltas. The delta represents the option sensitivity to a dollar move in the stock price. Okay, so for example, if you buy a call, then the call is expected to go up when the stock goes up, because it's a derivative, or down when the stock goes down. And at that moment, we could look at the option and its sensitivity to the next dollar move, right? So when you have an option that's very far away, it might not have a lot of sensitivity to a dollar move in the stock. Let's say you have an option that's 500% away, and it's a penny option. Well, a dollar move might not be meaningful for that option. Right, it's very far away. It's a tail. It's very far away. And it doesn't have a lot of delta, but you could have deltas that are deep in the money, which are very sensitive to a dollar move. So we keep we take the volume, convert it to the option delta, and keep track of it that way. And then we look on balance, as we keep track of them on balance, how did they look? So for example, in SPY, we're not open yet, so this is as of Friday's close. The net delta was 949,000 according to our positive, which was more positive than negative. So in the green, it's positive, bullish. If it's red, it would be negative, bearish delta. Okay. So you could see SPY IWM was 20,000, QQQ 1.1 million, positive deltas. And also keep in mind that these deltas can fluctuate back and forth, and they'll probably be from day to day in some kind of a range, right? So it doesn't necessarily, 1 million deltas in SPY might not actually be that much, as it fluctuates. That could be just normal order flow going in there. So when you're looking at it from day to day, we could go actually here a minute. Here's a let me see if I could go back. Oh, you could go back here. So this lets you go back in time. If you look at it from day to day, you could just kind of see that, it's in certain range. It's not going to be exactly zero, because there's just always trades coming in. So seeing that, we could also kind of compare to, what's going on in the individual stocks, because the ETFs and indexes, they're also used for hedging or speculating short term stuff that options don't necessarily have to be directional either. We're keeping it, the track of just the delta volume, but of course, people could be using options for other purposes. We don't know if they're hedging or doing certain strategies, but we could also take a look at the individual stocks as well to see what's going on in option order flow there. So if we slide down here, these are individual stocks. So here is the top 10 in the S&P 500. So we took the top 10 bullish order flow, top 10 bearish. So you could see here, these are the top 10 bullish by delta, and these are the top 10 bearish by delta. Okay. And again, this is only looking at the delta volume. So when we think about delta volume, for example, selling a call, well, that action, right, selling a call is selling delta, right? So you are selling delta when you're selling a call. But many people sell calls against stock that they own, so they do to collect premium. And it's not necessarily to get bearish, because you're the total intent is not, well, I think that the stock's going to tank to zero, right? That's not the way to think about it. But nevertheless, when you are selling a call, right, even if you have stock that you're long against it, you are still selling delta. You are giving up upside, potential upside, right? Because even if you sell a call, if the stock keeps going up, right, you will, yes, you're making on the stock that you're long, but some of those will get offset by the call that you're short. You still sold some delta, right? The stock keeps going higher. Eventually, if the stock goes above the strike that you sold, your stock will get called away. It's like selling your stock, right? If at expiration, if your stock's above the call strike, you'll get taken away. It's like selling it at that strike. So so even though the person's intent is just to collect some more premium, or just see that the stock's not going to go down, but maybe not go up as much, or sit here, the action of selling a call is still that action is selling delta. Okay. Selling a put, similarly, some people, they sell a put. It's not necessarily because they think the stock is going to go, to, up 1,000%, because then you're better off buying the stock, or even, buying calls. But the action of selling the put is still a positive delta, right? If the stock goes up, the put's expected to go down. If the stock goes down, the put is expected to increase, right, in value. So the delta is for a dollar move in the stock. The next dollar move in the stock, what's the aggregated delta? All right. And so here we see, options in Palantir, Ford, Tesla, Intel, on that looked like negative. Here, these were all positive deltas. So those are things that we could just take a look at, see if there's anything in there unusual. We could go to the particular stock, see maybe what there was, call selling or put buying. We could go further, deeper into it by going to the individual stock and seeing how those deltas accumulated, which expirations and so forth. So we could do that just by clicking on the option and going to that specific stock. But I'm not going to go to the specific stock today, just to stay on this report. We could do the same thing, top 10 in the IWM Russell 2000 or the NASDAQ 100, or just top 10 in general. Okay, so these are just looking at everything. We could do it by sector ETFs. This is buying the dip. So these are looking at options where the stock was down on the day, but the order flow looks like it's coming in more bullish. Okay. These are where selling the rip is where the stock was up on the day, but the order flow looks like it's coming in more bearish. Could be people who own calls selling back out. Could be people buy writing. Could be put buying. But this is where the stock was up, but the order flow came in more bearish. Here, buying the rip is where the stock was up, and the option order flow also looks like it's coming in bullish. Okay, so it looks like both the stock and the options are kind of behaving in the same posture, bullish manner. Here, selling the dip is where the stock was down, and the option order flow looks like it was also down. Could be hedging, could be buy writing, but that's how the deltas showed up. And if you want to look in your watch list, you just click on here. This will bring up your watch list and the top ones in your watch list. Okay, so this is a way to quickly kind of go to a report to get a sense of how the order flow looks like it's coming in. If there's anything unusual that pops out, or something that you want to go look at further, this is a consolidated report that allows you to quickly kind of tab through and see that. So, Will, I'm going to stop right there and throw it back to you.
Yeah, D, another great report for Market Chameleon customers to use. Thanks for showing us how to use it. Great job, my friend.
Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and we hope to see you tomorrow.
All right, we'll see you tomorrow, D. Thanks for everything. Have a great day. Bye. Hey, everyone. Thanks for joining another Chameleon webinars. Remember, if you're following us on YouTube or any of the social channels, please thumbs up. Always appreciated. We do have a afternoon show with Ryan from Options Robot. I put a link in the chat. So that's at 4:30. An email will go out to anyone who's a registered Market Chameleon user. Remember, if you're new to the show, go to the homepage. You can click on free trial and give a 7-day free trial for any of the Market Chameleon tools like the one you saw today. Again, thank you for joining. Everyone have a safe trading day, and we will hopefully see you either this afternoon, 4:30, or tomorrow. And remember, you can check out any of the video series on the YouTube channel. Just go to YouTube, type in MarketChameleon.com. You'll find that we have thousands of videos on that channel. Everyone have a great, safe trading day. Bye-bye.